Welcome to Get Invested, where it's not just about growing our wealth, it's about growing and improving ourselves. I'm sharing how I build market-beating stock portfolios using a growth-focused mindset, starting with just $100. I invested $100 on July 1st of this year, and I'm continuing to invest another $100 each week since. I share my trades here on the channel with a little bit of my thinking and rationale along the way. I include direct links to my portfolio in the video description below. If any of that sounds interesting to you, hit the like and subscribe button. It really helps out a new channel like this one. Let's get started. Looking at our portfolio, it now sits at $211.76, a market gain of $12 and a dividend of 7 cents. Our additions from last week, C Limited, Apple, and Zoom, have all done well. A lot of people would have said we were late to the party here, but we're in these for long-term returns, and they've already increased in value in the last week. In the same 2-week time period, we saw the Dow rise 1.26%, and since our portfolio is heavily weighted in tech, we'll start tracking it against the NASDAQ. The NASDAQ did 4.55%. So we are already 3 percentage points ahead of the NASDAQ, which is also 3 percentage points ahead of the Dow. Doing pretty well for just 2 weeks' work so far. Now, yesterday was a pretty sizable sell-off across the market. All industries got hit. You can see that very clearly on the one-day view. There were a number of big gains last week, so we can't be too surprised that investors are taking a pause to realize some of those gains as the market continues to waffle between investors who are scared of future COVID outbreaks and those experiencing FOMO and trying to jump in the market now when they feel they have a chance. Our philosophy on this channel is to make 3 to 5 year investments in businesses we believe will continue to grow and be worth substantially more at the end of that time frame. During that period, we expect to see many more sell-offs just like this one, and a few market crashes. In the face of those events, we'll continue to invest our $100 on a weekly basis and view such moments as buying opportunities. It means the companies we were interested in are now trading at even lower prices than we expected, some as much as 5 to 10% off. We'll take those opportunities any chance we get. So, to the new investors out there and those of you coming from the world of penny stocks, when you see sell-offs like this, don't be scared off by it. Don't start liquidating all of your positions to cash so you can sit on the sidelines and try and time a re-entry. You're almost guaranteed to lock in those losses and miss the re-entry point, overpaying for an asset you previously owned. If you believed in these businesses enough to make your original investment and your hypothesis has not changed, then market downturns are just brief bumps in the road and should instead be seen as buying opportunities. That leads me to talking about our next 2 companies. They are both white hot right now as the electric vehicle market continues to gain its footing. A lot of people are saying this pandemic is accelerating the rate of technical adoption by several years in certain industries. I see that gradually playing out in the automotive sector as consumers reevaluate their personal expenses, notably their vehicles during lockdown. I predict a surge in used car sales, followed by strong EV sales numbers by the end of the year when people realize owning a Tesla is just as inexpensive as owning a Camry. For that reason, the 2 companies we're going to talk about are Tesla, the US electric car and battery manufacturer, and their Chinese counterpart, Nio. Since our audience is new investors, I'll keep this basic and high level. Tesla stock has been on a recent tear. The price has increased almost 80% over the last month. They're now the most valuable car company in the world, but they're more than cars. Looking at their 10K, they're clearly positioning themselves to scale up the consumer and municipal applications of their energy storage technology. Here they're calling themselves out as an energy generation and storage company. They've built megapack batteries in Australia and the UK, and they've installed their 100,000th Powerwall. They're expanding their energy products. And it's speculated that if they're profitable for this most recent quarter, ending July 22nd, they would qualify for inclusion into the S&P 500. Now, Tesla is currently trading just under $1,500 a share, but their valuation doesn't really conform to any traditional valuation models. We'll be purchasing fractional shares, so I'm also less concerned with the price and more focused on their growth potential. This would likely be one of the most volatile stocks we'd hold, but I believe there's enough momentum in EV sales and the growth of their energy storage business that the upside potential is undeniable. The other company I want to talk about is Nio. I was first introduced to Nio when they launched their EP9 supercar concept up the hill climb at the Goodwood Festival of Speed in 2018. Watch this clip. It's an amazing feat of engineering. I'll link the full video in the comments. They were producing Bugatti-level performance from an electric car. Now, this was only a concept, similar to the Tesla Roadster, but it showed that it wasn't just vaporware. They could produce actual impressive products. Now, 2 years later, they're actively selling premium electric vehicles in the Chinese market, with plans to expand abroad soon. Their share price has almost doubled in the last month. They were at $3.75 a share at the beginning of 2020. They're now just shy of $14 a share. The company carries a ton of debt, but they received financial support from the Chinese government, and their sales are up 179% this year. They're selling over 10,000 cars a quarter, breaking their month-to-month records. And this all happened during the pandemic in China, when other car sales were slumping. Like Tesla, we consider Nio to be a very high-risk stock to own. Being a foreign company, they followed different accounting regulations with less rigor. As such, there could be some apprehension around fully trusting their financials. I mean, with recent accounting scandals from Wirecard and Luckin Coffee, I could understand why Western investors may be cautious to put further trust in foreign companies on US exchanges. On the other hand, early on, Nio was very upfront about their financial struggles. They carry a lot of debt on their books, and the Chinese government has stepped in to offer financial support. Now, that could be a good or bad thing depending on your perspective of their politics and economy. Ultimately, the EV market is still speculative, but I'm bullish on both Tesla and Nio. I think we're witnessing a changing of the guard as capital gradually shifts from legacy auto manufacturers to these more progressive companies and product lines. For that reason, we'll be purchasing some ownership of each company this week. Now, these are 3 to 5 year investments, so if they are overpriced today, we'll continue to buy in further at lower prices. Or if their values continue to climb in the short term, we'll be glad we got in when we did. So we have $20 into Tesla, $20 into Nio, and we'll put the additional $60 into the other sectors of our portfolio. Remember, we chose all of these companies because we believe in them for the next 3 to 5 years. If I was restarting this portfolio today, I would buy all of these same companies immediately. That's how confident I am in their performance. So we've got the trades scheduled. They will execute first thing tomorrow morning, and we'll check in next week to see how the portfolio is doing. If you found this video interesting, hit the like button. Also, feel free to share your thoughts in the comments. If you want to join us on this investing adventure, hit the subscribe button. We'd love to have you. Links to this episode's portfolio are in the description below. And if you want to get notified each time we add a new video or new stocks, make sure to hit that notification bell. Thanks a lot. Have a good week. Stay safe and get invested.